Good morning, everybody. This is the Live Market Open for Wednesday, May 25th. I'm Yohay Elam, a Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Morning to everybody here in the room. As always, we'll talk about the recent developments in markets. The mood is certainly better. We'll cover various charts and levels, talk about the next 24 hours in markets, and also, of course, as always, answer your questions. If you can't see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. And today, as we did in the past week or so, we'll have also one special topic. It'll be 3 signs to follow the Brexit, to understand who's leading and who's not, and what's priced in and what's not. That'll be later in the show. First, we'll start with the recent news, things going on in markets. So late at night, we had the Eurogroup meetings finally end after something like 11 hours in Brussels. Must be fun over there. So the IMF surrendered. Basically, they agreed to push back debt relief for Greece to 2018, basically when the current program, the third bailout for Greece, ends. And that's after Germany's elections scheduled for October 2017. So no political problems for Germany because Greece's debt will be discussed only by the next government. And and they also agreed to disburse the next tranche of aid to Greece. So another classic can-kicking exercise. I don't think everybody's really happy. I mean, it's what I'm saying is not just my criticism, it's what everybody's talking about. They continue to play this game, but anyway, for currencies, it means a period of quiet on the Greek front. For Greeks, it means more suffering. But so good morning, Ed. Good morning, Geddes, Luca, Ramon. Hi, everybody. Yeah, gold is sliding. Indeed, better mood in markets. It's not helpful for gold. Other events we had yesterday, Carney talked about inflation having bottomed. That helped sterling. He also, of course, talked a lot about Brexit and was grilled by politicians if he's intervening too much or not. But mostly, the biggest message was that inflation has bottomed. In general, he was relatively optimistic. And Brexit opinion polls continue shifting towards the Remain camp. We'll talk about the 3 things that rock the boat for sterling and shape up expectations later on. In terms of data, we had quite a few data pieces yesterday. Starting from the UK, the public sector net borrowing, no surprise, 6.6 billion. More importantly, and perhaps adding to the weight on the German zoo adding to the weight against the euro, and joining the sort of discontent with the Greek thing, it was German zoo indicator missed with 6.4 points instead of 12 points expected. So lower confidence among German industrialists, among investors, analysts. Today we'll have another key release, the IFO one, just after the show. But then we had some good news from the United States. A huge surprise in new home sales, a jump of 16% to 619,000. 521 was expected. Of course, this looks like a one-off, probably is a one-off. Something was skewed in the data. A jump of 52% in the Northeast doesn't really make sense, but it's, even if we cut down from the top figure, it's still something good is happening in the US housing market. If the US is moving forward, the whole world is moving forward, and this is good for the general atmosphere. And we've seen stocks rising in the US, in Asia, and commodity currencies rising. Among these commodity currencies, we've seen New Zealand enjoy also positive trade balance, better than expected. In Australia, the construction work done figure was a miss with a drop of 2.6, but the Aussie seems to be carried away. Okay, now let's look at charts. I'm talking too much about what's moving markets without talking about what's happening. So yesterday we had finally a breakdown of the euro. The weak zoo figure worries about Greece, and pressure eventually mounted. The stronger US dollar that we've seen yesterday pushed euro dollar under 111.40. Okay, since then it's managed to recover now with, but not going anywhere fast. Basically, a weaker euro. Okay, next level of support is 110.70. Resistance, I would say at the moment at 111.80. This line of 111.80, which was important. There is a reason why I have it on the chart. It was support right here in March, but now perhaps it's becoming less important. Anyway, 110.70 is the next line of support. 111.80 is resistance. Sort of a worse mood in Europe. Remember also this week we had the far-right candidate in Austria hardly being defeated in the elections there. Lots of discontent in the old continent. Not such a good mood in Europe. Finally, also, we've seen this, the world's most popular currency pair move a bit. Things are very different in the UK. Yesterday, we had a very nice move to the upside, better opinion polls. Mark Carney's talk about inflation pushed pound dollar back up here. I still see 146.50 as resistance, 145.80 as support. Brexit is, well, we're 1 month away, and this remains a very important topic. Before I move on, I see a few comments here. Ed says, Greece sees only 8% of any bailout funds. The rest goes back to the EU and Germany to disburse and French banks. Yeah. Germany holds passwords to central bank access. Well, I don't know about the passwords, but the first bailout at least went to basically save German, French, and also Greek banks. Also Greek banks from, they held lots of Greek debt, and this private banking problem turned into a public issue. Now German taxpayers, Slovak taxpayers, Spanish taxpayers, everybody's liable. Okay, so, and also the IMF. Currently, the bailout funds just go to the same pocket. I mean, Germany, France, other countries, the IMF, they take money, they loan money in private markets or take it out of their budgets and pay Greece, and Greece pays them back. So it's basically the same. Another comment here. Amazing, they give a 6 billion to the Sultan to keep mystery. Yeah, and to kill the shadow of freedom is called. Yeah, I'm also a bit angry with that. I mean, in order to keep refugees out, which is totally against European values, they pay Turkey, which is a country that still a democracy, but sort of democracy is eroding quite quickly over there, less freedom of speech, while they're punishing Greece for, well, mistakes that bankers did. Anyway, if we dive into these topics, we'll lose focus on markets, but let's go back to markets because that's what we're talking about. So back to pound dollar. Is the GDP, is the pound just bracing for June? Yeah, the opinion polls are shifting more towards the Remain camp. And that was another poll yesterday from the Telegraph. We'll talk about that more in detail later on. I mean, a special focus on 3 things to watch out for. In general, the pound feels a bit perkier, as they say, shiny. Sterling, anyway, 146.50, 145.80 are the levels that I'm watching. With the better mood in markets, we've also seen dollar yen move to the upside, currently hugging the 110 level. Not such a big move, and basically just sort of a swing back up, but currently hugging the 110 level. I see strong support only at 108.25 and resistance at 111. So, and the pair, as I see it, is very choppy here. I mean, we are seeing some kind of an uptrend, but nothing. I mean, the lines are a bit blurry, at least for me. Anyway, the risk on atmosphere is positive for dollar yen. Also makes Japanese policymakers happier. Another just small headline I've seen. Japan is considering once again to postpone the sales tax hike, and this might trigger fresh elections. Current Prime Minister Shinzo Abe has basically no opposition. He did that in the past in 2014, calling new elections, and he won a landslide victory. That might happen again in the summer. Okay, let's continue. Dollar CAD. Dollar CAD is the currency in focus today because we have a rate decision and crude oil inventories. Yesterday, it sort of tried to break higher above this 131.70 level, never went too far away. Currently, it fell back down thanks to rising oil prices. Oil prices are getting so close to $50 a barrel on WTI crude oil. Currently, so 130.80 remains support, 131.70 is resistance. So the Canadian dollar is certainly improving alongside other commodity currencies. Well, yeah, including this morning another edge to the downside on dollar CAD. The Australian dollar, which was hit quite hard, fell to a new low there of 71.40 to support, made a big bounce back to the upside, back above the 71.70 level that provided support last week, and back towards 72.20. Again, data in Australia was not positive. The construction work done figure was not good. Then tonight we'll have the capex number, but things are looking a bit better. I mean, it's getting carried away with other commodity currencies. Strong resistance 73. Okay. Let's go on. Kiwi dollar, same thing here. With the Kiwi dollar, we did have actually good data to support it. So 67.47 is the current level, a bit sliding now at the moment as we speak, but the positive trade balance supports the Kiwi. I still see the range, well, maybe an extended range would be 67 to 68.40. We are leaning to the downside. The risk on atmosphere didn't prevail throughout the week, but we are seeing a bounce. I believe the Kiwi can outperform the Aussie because just fundamentals are looking better. Dollar Swiss franc, basically, well, the dollar is sliding a bit against the franc because the franc is strengthening. Nothing to get too much excited about. 99.40 was the top, more or less. 99 remains support, followed by 98 and 98.50. The line of parity is strong resistance above. Euro Swiss began sliding from the top. Maybe the Swiss National Bank fell asleep, or, well, anyway, these moves aren't really huge. We were already topped 111.20. Now we're sliding back down 110.56. At least we're seeing some movements here. 110.15 is support, followed by, I would say, a better line of support would be right here at 109.60. Anyway, euro pound 76.30 is the current level. Yesterday, huge drop in euro pound because of two things. First of all, the weakening of the euro against the US dollar for all the mentioned reasons, and also the strengthening of the pound. So it's quite a dramatic fall. The pair failed, the cross failed to break resistance at 77.40, and this resulted in a drop, which is quite significant for this pair, all the way down to 76.10. Currently at 76.30, I see the line of 76.50 as a resistance, and on the downside we have the round number of 75. So all in all, euro pound is staging quite an impressive fall, thanks to the big recovery of the pound and also some weakening of the euro. Okay, so quite interesting movements on that cross. Euro yen, very stable, but at lower ground. 122.62 is the current level. 123 is resistance. Support 121.65. The euro and the yen both weakened yesterday against the US dollar, and things aren't going very fast over there. Pound yen, once again, the seesaw continues. The dragon is back above 160. 162.50 is strong resistance. 158.50 is somewhat weaker support, but 160 remains strong support. Okay, and we talked about oil, so let's complete the round here. So the high for today, 49.42. It's a 6 or 7 month high, and prices of oil continue rising. Today we have crude oil inventories, and let's see how that affects the price of oil. The seesaw in oil continues. It's also driving season in the United States, officially beginning this weekend with Memorial Day. Also last year we've seen oil prices rise in this season, but they fell later on. Okay, okay, so that completes the round of currencies and oil that we do every day. I mentioned that stocks are on the rise. They advanced very nicely in the US yesterday and also in Asia overnight. Let's see if your comments, questions here. Why did gold, take a hammering? Yes, talk why gold took a hammering. Well, with higher chances of rate hike in the United States after the new home sales, less money printing, less easy money, less support for speculative precious metal called gold. That's how I see it. Again, I don't follow gold that closely, but that's most of the movement in oil is not related to pure supply and demand, but more related to what's going on in, speculation about central banks. A question by Luca, do you think there's a chance the BOC may leave the door open for a cut? Or should the fallout of wildfire prove a burden to the economy? Would be bearish for CAD. We'll talk about the Canadian rate decision when we talk about the events for today. I'll certainly detail about that. Good morning, Sirik. Amazing dollar CAD didn't pull back even with oil shooting for 50. Yeah, the Canadian dollar is showing a lot of weakness. Okay, let's move towards the events of the day. Undoubtedly, the Canadian rate decision is the main event. So let's jump straight to that because you asked about that. So we've seen lots of, first of all, the Canadian rate decision is at 2 GMT, okay? That's 4 here in Europe, 3 in the UK. The Canadian Central Bank of Canada, the Bank of Canada doesn't meet that frequently. It has its meeting today, and a few things are going on in the economy. I believe there is a chance for a weaker Canadian dollar. Wildfires in Canada weigh on the Canadian dollar, weigh on the Canadian economy. Okay. Another reason is that the Canadian economy did manage to balance out the fallout from lower oil prices earlier this year, late last year, because of a weaker currency. Weaker currency helped its exports to the United States, helped exports elsewhere, and also balanced the level of inflation, imported inflation. Okay, so the Bank of Canada was sort of smart not to cut rates back in January when all other central banks were going towards more easing, but the Canadian dollar CAD was then almost at 147. And this was already enough loosening on its own, okay? The exchange rate did the job for the Bank of Canada. Things have changed since then. The Canadian dollar strengthened and doesn't help Canada. The wildfires mean that despite the rise in oil prices, Canada cannot take advantage of that. And also forecasts for growth are much weaker than they used to be. So I don't think the Bank of Canada is going to cut rates, but I think they're going to convey a very dovish message, open the door for rate cuts later this year. Doesn't mean they're going to cut rates, but I think they're going to be a bit more gloomy, perhaps complain a bit more, sort of up the ante against the weakness, against the strength of the Canadian dollar. And I think that, the weakness we're seeing now in the Canadian dollar, as you mentioned, that the Canadian dollar is not taking enough advantage of the much higher oil prices, is a sign of weakness, and it's not over yet. That's my bias. Of course, they can surprise, but Stefan Polos, don't know how it's pronounced, and his team, I believe, they're usually optimistic in comparison to other central banks, usually not intervening too much in markets. I mean, talking like Glenn Stevens does in Australia, complaining a lot about the Australian dollar, not like Graham Wheeler in New Zealand. But I think they have room for more complaints, okay? They might also mention once again the lower bound for interest rates, as they mentioned in the past, is minus 0.5 and not the absolute zero, okay? Currently, the interest rate in Canada is 0.5%. The post-crisis low was 0.25%. Mark Carney, before he became the governor of the Bank of England, he cut rates back to 0.25 and raised them again to 1%. Last year, Pelosi cut them back to 0.5 in surprising decisions, but he also surprised markets by not cutting rates this year. There's always a chance of surprise. In this case, the Canadian dollar will crash. I don't think he'll cut, but Pelosi will cut. I think they will make a more dovish statement. Okay, that's the main event for today, but it's not the only one for the Canadian dollar. The crude oil inventories at 2:30, always important. It's not only crude, maybe I should fix this. Let's call it oil inventories and US production. So oil inventories, it's not only crude, it's also gasoline and distillates. But crude, of course, is the most important one. And we also have it, and alongside the same report, we also get an update on the level of production in the United States. So in the past many weeks, many months, the level of production has finally come down. Okay, the peak was something like 9.6 million barrels per day in the United States, and it fell under 8.8 million. But last week, the fall was very, very moderate. If we see a rise in production in the United States, and that's possible thanks to higher oil prices, then we can see oil falling, and that can also hurt the Canadian dollar. Okay, so that's what I'm looking at. Of course, maybe I'm wrong, and maybe the level of production continues falling, but we've seen how the U.S. shale industry, how these frackers, as they called, how they're very, very flexible in their production. Okay, before I move to other events, yeah, pound CAD may catch fire today. Lucas says, I am dollar CAD, I'm a buyer, and then he pulled back to 130. Yeah, I also think the direction is up for dollar CAD, but yeah, as Cyrix says, careful, Luca, just on consolidation, I have bearish targets as far as 127.45. Yeah, 127.50. I also see this as a very, very strong line of support for the Canadian dollar. Okay. Where's 127.50? Right here. Okay. So this was a resistance. This was support. Sorry, back in the beginning of April. Then resistance, and then well, it sort of support line afterwards, clear separator of ranges. Oil also needs some consolidation, but I see a possible move to 57. Yeah, we've seen 57 last year, so I wouldn't rule that out. Again, I believe that there's still too much supply, not enough demand. I don't agree with the guys at Goldman. Anyway, 51 is the next level of resistance. Let's see what was the high last year. In WTI crude oil, of course, there's more than one oil price. So it was right here at 62.40. Well, I don't think we'll reach these levels. Anyway, let's talk about other events for today. We jump straight into the Canadian dollar because, well, I think to answer the future question by Jax, that's the main pair for today. But just after the show at 8 GMT, we have the German IFO survey. IFO is Germany's #1 think tank. They have a very wide survey. It's considered not only to reflect the current mood, but also the future mood. Let's see what's expecting us according to the fixed rate calendar here on Forex Crunch. Let me just filter out other events we have today from countries we're not watching that closely. So we'll get it'll be easier to read on the charts. Yeah, the main countries that we're looking at. Okay, so I filtered that out. So IFO, the main figure is the business climate. That's expected to improve from 106.6 to 106.8. Okay, some positive news for Germany in terms of sentiment, but it's also important to watch the current assessment, which is also expected to remain unchanged at 113.2, and the expectations number, which is expected to rise just a bit. Okay, usually these three figures move together. If we have a significant surprise to the upside or to the downside, or even a not that significant surprise, I think we can have nice movement on euro dollar because it's a very highly regarded survey. Okay, at 12:30 GMT from the United States, the goods trade balance, not such a market mover on its own, but it sort of feeds into the assessment for GDP. Wider deficit is expected from 57 to 60 billion. Okay, it's a relatively new figure. It's part of the wider trade balance number. We also have the housing price index, usually not such a big market mover. A speech by Harker at 1 GMT. Harker has shown his hawkishness of late, okay? And then, of course, as we mentioned, well, the Canadian, before the Canadian numbers, we have the market flash services PMI in the United States, and that's expected to be a bit better than last time. It's the preliminary number for May, not as important as ISM, but still worth watching, from 52.8 to 53.1. And then, as I mentioned, the Canadian indicators, well, the Canadian rate decision and the oil inventories. And then at night, we have capex in Australia. Capex is capital expenditures. It has quite a significant impact on the Reserve Bank of Australia on their next decision. So a drop of 3% is expected there. If we have a bigger drop, and it's possible because with lower commodity prices, we have less investment, especially in mining projects, of course, then it could raise expectations for a rate cut in Australia. And at 2 GMT, we have the New Zealand budget release. Well, that's deep at night. They don't know about the impact. Anyway, we have quite a few comments here. Yeah, is Germany getting fed up with the ECB policy? Well, yeah, they had lots of criticism about that. There's lots of criticism in Germany about the negative rates, low rates in general, that they're hurting German savers, pensioners, and this public anger. The rise of the AfD party, Alternative für Deutschland, the Eurosceptic party, is also feeding into the mainstream, a bit similar to what we've seen with UKIP in the UK. So that's the sort of stronger criticism on the ECB. Chart here from Sirik on oil. Let's share it with everybody. So yeah, the trend is higher. Yeah, lots of potential to the upside. The trend has been higher with lower production in the United States and perhaps more demand from India pushing. I mean, fundamentals are looking better. I'm still a bit skeptic about oil. I think the US shale industry can push prices back down. But yeah, the charts certainly show an uptrend, and that's the trend. We're at the highest level in around 7 months. So thanks, Sirik, for that. Germany was always, yeah, they would imprison Draghi if they could. Well, I'm not. On the other hand, Draghi is keeping the euro weak, and a weak euro is good for German exports, especially to China. So I think that many German industrialists are quite happy with the ECB's policy, but politicians have a different opinion. Yeah. Thanks, Sirik. Okay. Okay, comments here from Luca to Sirik about oil prices, about oil. Anyway, yeah, channel bottom. Yeah. Anyway, the price of oil, WTI crude oil, is moving relatively gradually to the upside. I'm looking. I mean, the turnaround for me would be when U.S. production changes from a drop to a rise. Maybe we'll see that today. Maybe not. Okay. Is there a central bank of Germany separate from the ECB? Yes, the German Bundesbank. Well, in general, all the European, it's called NCBs, national central banks. They're all still function, okay? But of course, they're under the supervision of the European Central Bank. And well, the governors of these central banks participate in the ECB. But that's why. But of course, the ECB members are more. Sorry. Yeah, ECB members are some are appointed directly and some are central bank governors. Okay. Okay. It's being kept on strong sentiment. Dollar CAD. Yeah, let's look at the chart you shared here with dollar CAD. Thanks, Sirik. Yeah, also going up from that 127.50 level. A bit capped. Pair is having a hard time to rise. Maybe if we'll have a very dovish statement from the Bank of Canada, we'll have a break to the upside. We'll probably fall harder because of that. Yeah. Okay. So thanks for this chart. Okay, now let's go to the, well, sort of special segment. We talked about events yesterday, events for today. Covered various charts, and we'll of course have more of your questions and the wrap-up for today, but now let's do the special segment for today. So today's special segment is about 3 things to watch out for Brexit. Okay, so we want to know basically what's priced in, where the wind is blowing to. So currently we talked about higher chances of a remain, of the vote changing towards from sort of even Steven, from basically undecided, from a very tight race to a lead for the Remain campaign. Now, if you're looking at, there's so many opinion polls, and some of them can still show, of course, a lead for the exit campaign, for the Brexit. What's important to watch is not an individual, not just don't look at one opinion poll as standing on its own, as reflecting, okay, this poll tells us everything. The main thing to watch is the difference between the current poll of the same company and the previous one. So if one company shows now a 2% lead for Brexit, but a month ago or 2 weeks ago it showed 5% lead for Brexit, that means there's a trend against a Brexit and for Remain. If another company still shows a big lead for the Remain campaign, but last time it had an even wider lead, that means things are moving in the other direction for a Brexit, okay? So it's not only important to look at the sort of average of polls or just the latest poll that moves the headline, but you need to take this specific poll against the previous poll from the same company. That's assuming, of course, the methodology hasn't changed. That now there's more sort of asterisk here, another detail to watch out for. ICM, for example, publishes 2 separate polls. One is a phone poll and the other is an online poll. So you have to be even more specific and to compare phone poll against the previous phone poll by the same company, ICM. Okay? So that gives you sort of where the wind is blowing and towards what's priced in. That's one thing to watch. The second thing to watch, another, is more political. You have to look at who's angry and who's looking for the next day. So currently, now that we have a bigger lead, I mean, more chances of the UK to remain in, according to opinion polls, we're seeing the guys from the Brexit very angry. They're angry at their own campaign. They're angry that the government that is supporting the Remain campaign is using illegitimate tools to convince the public. They're more angry and frustrated, while the Remain campaign is sort of looking for the day after. David Cameron looking for party unity in the day following, on June 24th and onwards, okay? Of course, this can change. If we see more angry comments from Cameron and George Osborne and more confident talk from Boris Johnson, then we'll see that things have moved towards the Brexit. So that's another thing to watch, because they also have their own opinion polls and they also have a sense, I mean, politicians, and they also have their sense for what's going on under the surface. That's the second thing. And the third thing is just to look at charts, okay? So if we see the pound moving on its own in one direction, that is very telling. That's, for instance, what we've seen yesterday. We've seen the pound, we've seen yesterday the dollar strengthen across the board, but the pound beat the dollar quite hard. I mean, it was standing out. That means that the sentiment has shifted in favor of a Remain campaign, and it can also move in the other direction. If we see another poll that shows higher chances for a Brexit, then we can see the pound falling on its own. But if we have a poll showing higher chances of a Brexit and the pound not moving too much, then maybe this poll is not exactly that important. Okay, so these are 3 things to watch out for. Changes in the individual polls. You need to compare apples to apples, YouGov to YouGov, ICM to ICM, Ipsos Mori to Ipsos Mori. Second thing, look at, I mean, if you're looking deeper into British politics, look who's angry. That means they're on the back foot, and who's confident. That means they're in the lead. And the third thing is, well, when the pound moves on its own, that's the best indicator. The pound wants the UK to remain in. Okay, the devil they know. Okay, so that's the 3 Brexit things to watch. Okay, that's the end of this special segment. Now, it'll of course be released as a separate clip. Now, let's see if we have more questions here. So, yeah, Luca talks about pound CAD. Pound CAD is not a currency pair we follow closely, but it's certainly interesting. Here's the chart Luca shared with us. It's moving to the upside. Yeah, sort of unconvincing Canadian dollar and the strengthening sterling. 195. Yeah. Let me share my chart of pound CAD, and yeah, certainly strengthening. What are the levels I was looking for in the past? Let me comment with my level. So yeah, 194.20, and yeah, 195 is on the road ahead. We used to trade above 2. Also a very known number, like double the parity. Anyway, to the downside, I still see 186 as support. Interesting days for pound CAD. Lots of pips to be made. Well, and also lost over there. So thanks, Luca, for this chart. What will be worse for the EU, Brexit or Donald Trump? I think a Brexit, because it'll be the beginning of the end of the European Union. About Trump, it's more, well, he's in the United States, of course, and it's unclear if implications of his policy. Remember, there are lots of balances and checks in the United States. Cyrix says, looks good, Luca. I actually have the same target. Okay, so we have both Luca and Cyrix looking at pound CAD, looking bullish, right? Also looking at 195. So here's the chart by Cyrix. You can put them maybe side by side. This isn't working that well for me here. Anyway, this is a chart by Cyrix of pound CAD, and this is the pound chart of Luca of pound CAD. Okay, so thank you both. Pound CAD, yeah, has been on the upswing and perhaps offers more opportunities on higher chances of dovishness from the Bank of Canada and lower chances of a Brexit. Okay, Luca says, I think Bill Clinton and Donald Trump on a date with the Spice Girls would wreak havoc to both the UK and US politics. Yeah, David Beckham is a big star in the United States. Anyway, so let's see how things shape up over there. Okay. Anyway, thanks Luca and Cyrix for the charts. I encourage everybody to share charts during the show and with each other, of course. I'm glad this community is helping each other. Okay, let's take one look also at one of my favorite things every morning. Look at the chances for rate hike in the United States. Actually, they're on the rise for June, so it's now at around those fib numbers. Well, 37.5% for a rate hike in the United States. This is a result of the new home sales. Yesterday, when we were looking at this, it was only 30%, now 37.5. Okay, and that's for June. I think yesterday we had a special segment about the case for a July hike. I think it's still more probable, and it shows 60% chance. I'm with bond markets on this. Okay, so now, this is the wrap up for the live market open for Wednesday, May 25th. The market mood is better, and US new home sales, higher commodity prices, higher stocks. That's a general mood in markets. Also, Brexit opinion polls continue shifting towards the Remain campaign, and the world likes it. Elsewhere, the Eurogroup ended with a surrender for the IMF. The debt, no specifics on debt relief for Greece. That's kicked back to 2018, officially when the current third bailout program ends, unofficially after Germany's elections in October. But it leaves everybody with a sour taste in the mouth. Carney talked about inflation having bottomed. That's also supportive of the pound. Big event yesterday was new home sales with a huge surprise of 619,000. Many suspect this number, but even if it's a bit lower than that, things are moving or seem to move in the right direction in the US. And in Germany, the ZU figure missed with 6.4. Today we have the IFO. In New Zealand, trade balance beat expectations. In Australia, things are not looking that good, but the Aussie is getting carried away with other commodity currencies. This morning, well, euro-dollar resumes its falls. Euro-dollar has been on the back foot. Is it trading like a risk as a safe haven and therefore falling? I think it's more just the gloomy mood in Europe that's weighing on the euro at the moment. Support 110.70, resistance 111.80. Pound dollar looking much better with higher chances of remain. 146.23 at the moment, 146.50, resistance 145.80, support. Dollar yen hugging the 110 level. I would say only 111 is strong resistance and 108.25 strong support. In the middle, it's just a choppy range. No demand for the safe haven yen at the moment. Big day for Canada today, trading very nicely in range. Currently 131.17, support 130.80, resistance still at 131.80. Aussie dollar sliding a bit down. Well, there was no real justification for a stronger Aussie with that construction work done figure. 71.75 support, stronger support 71.40, resistance 72.20 and 73. And the kiwi, well, very much in range, 67.45, a bit higher on the day. 68.40 is resistance, 67 is support. Okay, today on the agenda, cover it quickly in the wrap. In around 15 minutes time, we have the German IFO figure, expected to remain almost unchanged, but you can never know what surprises we'll have there. 12:30, the goods trade balance in the United States. Bigger deficit is expected. It feeds into GDP figures for the second quarter, because it's the figure for April. Also watch out for the market flash services PMI. Markets manufacturing PMI missed expectations earlier this week. And the big day from Canada, a busy half an hour. Most importantly, the Canadian rate decision. I expect them to be more dovish, given less oil production in Canada, lower GDP forecasts, stronger Canadian dollar in comparison to their previous, to earlier this year. This weighs on the Canadian economy. I don't expect a rate cut, but I expect dovishness, more talk about, a desire for a weaker CAD, opening the door for rate cuts, a dovish statement to weigh on the loonie. Also watch out for the crude oil inventories, distillates, gasoline, and the level of US production. If US production moves to the upside instead of falling, that's bearish for oil, which is currently on a roll. Okay, and at night we have Australian capex, capital expenditure, a quarterly figure, and also significant for the RBA and the kiwi trade balance in the middle of the night. So that's the wrap up for today. In general, still a risk on atmosphere, still favoring commodity currencies, but maybe that was more yesterday, and now it's more of a consolidation mode. Big event for today, as I mentioned, the rate decision in Canada. Yeah, okay, before we head off, I see here a few more comments. Thank you. Well, Jax, you're welcome. Lucas says on 100.70, slapping up and fib level for dollar yen. Anyway, thanks, Luca, for the chart. Yeah, moving to the upside. I guess you meant 110.70. Anyway, quite, yeah, 110.70. So yeah, so we're getting close to this line of resistance. For me, dollar yen is looking for a new direction. It's a bit lost over there, but yeah, it's moving up, and let's see if your trend line rejects it or not. Quite a nice trend line on dollar yen. Yeah, okay. So that's it for today. Thank you, everybody, especially Sirik and Luca, for the great charts. Wish everybody a safe and successful day in markets. Watch out for the loonie. And that's it. So that's it for today. See you tomorrow. Thank you, and bye-bye.